Palisade Radio is brought to you by First Majestic Silver Corp, one of the world's purest and fastest growing silver mining companies.
Welcome to another episode of Palisade Radio. This is your host, Colin Cattell. And joining us on the line today from the Cambridge show in Vancouver is Dev Randhawa, founder, CEO, and chairman of Fission Uranium. If you're unfamiliar with fission, then you've missed the hottest story in uranium in the past couple years. In just 2 years, the Patterson Lake South project was taken from discovery to resource estimate and is now at the PEA level, classified as the largest undeveloped uranium asset in the Athabasca Basin. Dev, welcome to the program.
Well, thank you very much for having me, Mr. Kettle.
You know, I want to start out by asking you, since you're at the show and there's not too many shows left these days, how's the Cambridge show this year?
You know, it's been really good. Joe does a great job, and it's a plus for me. I've been on the business a bit. It's always good to meet, see old friends again. And it's obviously a lot less booths, but, that's obvious in a bear market. You're going to get that. But smart people still out there. Like you said, there's a lot less shows now. We used to have the San Francisco show and something like Thanksgiving time in the U.S. We used to have the New York show. Right now, we don't have that anymore. There's no regular way for people to meet. And honestly, we do need more of that because, the internet, when it goes so far, deals are cutting with, eye to eye. So it's funny, we're going to have Pete Atkins. I don't know when the next show, unless it's going to be Sprott. The Sprott show Rick Rule does. So it's I think it's great. I think these shows are very necessary. You can't hide behind your online world all day, right?
Well, that's true. And I remember, Dev, we actually met for the first time at the San Francisco show, which is another show that no longer exists. It is being replaced this year. But anyway, I want to talk to you about fission, and the company's really bucked the trend for the last couple of years under your leadership. Let's start with mentioning late last year there was a plan between Denison and Fission to merge the two companies, and that ultimately fell through due to shareholders not voting it through. But the very interesting thing is, just a couple months later, you've now secured a major financing from the Chinese, making me question, do you think that the shareholders had the right thing in mind with saying, hey, this asset is even superior to the peers and we want to keep this separate?
Well, first of all, actually, most investors said yes. Over 50+% already said yes. But we as a management team set the bar very high. When you do takeovers, believe it or not, you can actually adjust how high you got to jump. We adjusted the bar to be 67%. We could have done it 50%. So we purposely picked a higher threshold, making sure this is exactly what everybody wanted, the most 67%, right? So it wasn't, some said we were Machiavellian about it. And also, if you notice, there was a PEA in the middle of it, meaning that we believe that investors deserve the right to vote with all the information. So a couple of things that are not always understood by people is that the vote went over 50%. More than 50% who voted wanted a deal, but not 57%. But we could have done that differently. Just moving the fractions around here and there. Securities laws would have said, 50% is all you need to go for it. You're done, right? But we didn't do that. And also, we made sure our PEA came out the middle of it, which would tell us how good is this project at first glance by somebody looking at it from an economic point of view. So those two things were purposely put into place to make sure that the decision was very well informed. So there's just a couple of myths about that project that people weren't always aware of. The other thing is, that's it. And with the Chinese, they were always there, but they always told us they couldn't move for quite some time. And that's just a fundamental problem. They are state-owned companies in China have to go very slow. They put in new anti-corruption laws a while ago, and as a result, everything takes much, much longer. So just so you know, our first meeting to get a deal done was 16 months ago. Actually, I probably would say close to 18 months ago, and I think about it. We're going to be closing here this week. So it took 18 months. And, it's a long time in the life of a company. So we were always talking to them. But I think what triggered for them was the PEA. Some say knowing that somebody else would make a run at us, moved the agenda up for them. Maybe the Denison deal kind of woke them up going, hold on, we might not get a chance to invest in it. So a lot of reasons, but if I known they were going to do a deal quicker, I'm not sure we But even the Denison deal took 6 months. I met Lucas to talk about it directly at the BMO conference, right? So, it's these things aren't as simple, and there's no book on how to do deals in a crappy market. And that's our problem, right? Obviously, is we've got very crappy markets, and people with the money are the ones who hold the gold, right? They can set the terms all you want, but this is we won that London Mines and Money. We won the best project in the world, 2015. Not the best uranium project, the best project, period. And that's a tough one to win when you're. That's a really tough one to win in there, because there tend to be most African projects when you're London Mines and Money, but we won that as a Canadian. So the project is amazing. The project is amazing because it may not just be the best uranium project in the world. That's not, but it may be the best project in the world, mining project, period. Because it's an easy way. When you're going to open a pit operation, okay, that's the first thing. You're digging a hole where the rock is worth $1,400, and it costs you maybe $100, $150 to pull it out. That's a big margin. You really can't. Like the best example for gold bugs is, imagine 5 million ounces, 50 meters from surface, open pitable, in a great jurisdiction like Saskatchewan, and it's running. Are you ready? 46 grams per ton, right? And you know what Lucas Lundin, the guy, is paid for, and they're probably 8 grams. Well, this thing is 46 grams equivalent. That's how expensive, crazy this rock is. So, it's an amazing project when you compare it even to other non-uranium projects as well. So I think there are different factors why that Denison didn't go through. We could have pushed it through. We didn't. We as a management team wanted to give, because we felt, and enough people said, you know what, we don't like Denison's projects enough. We love Lucas, but we don't like his projects that much. We want to give up half of our company to give this up. So there we go. That's kind of instead the Chinese said, hey, we'll give you 80 plus million for 20% of the company.
Yeah, well, Dev, you're one who perseveres, and you have for some time, and I can only imagine a certain level of frustration after working so closely with the Denison guys, anticipating a merger might go through. But like we just said, the Chinese came through on this deal, CGM Mining, quickly afterwards, and that's testament to the PEA. You just touched on it a little bit, but let's kind of outline why this project, in your mind, an investor's mind, is so phenomenal. First of all, it's only 50 meters from surface, which means you don't have to dig down very much. The costs aren't very high to get the uranium out. It's also very large. You have over 100 million pounds between indicated and inferred. What else can you tell us about the project in its current state of why it has attracted such a big partner?
Well, there are, like the PEA what the PEA tries to do is saying, okay, let's look at the jurisdiction. Let's look at the type of rock you've got, how much rock it is, how expensive the rock is, and using today's mining methods and building a mill, what would it cost? Well, the cost came like about $16. And so if you go to production right now, it'll cost you about $16. And just keep that in mind, Cigar Lake is around 19, Kazakhstan's 20, and other ones that are running right now around 30. So if they're saying, RPA, which is a very conservative group, said, if you were to go into production right now, you'd be the cheapest producing uranium mine in the world. So, and it's because uranium starts at 50 meters from surface. Now, I know there's some great stories out there of uranium at 400, et cetera. But it's not the same thing. Unfortunately, the basin is full of deposits that are deep. They're not coming out anytime soon until uranium hits 70 or 80 or 100, because it doesn't make any economic sense. The average cost of a mine around the world, Chemical has said, is around $60, $65. So that's including getting your money out and trying to make a profit. Remember, some of these operations are still running like Paladin. They're just getting their cash costs out. They're not getting their money back. They're just covering their cash. Even that sometimes. So it's a very unique, it's a once-in-a-lifetime project. Like Ron Analyski, I trust very much. Ron said, Dev, it's a once-in-a-lifetime project. Don't lose it. Hang on to this thing and develop as far as you can and before you hand it over. So Yeah, we are a tough group. In fact, I remember the very first article a guy wrote on uranium. The number of articles came, but the one that really got it going was a guy by Ralph Kettle called The Other Yellow Metal. And you might want to dig it up. And talked about Strathmore. Yeah, that's how far back we go back. Strathmore was something we started in 1996 on uranium, supported by Mr. Casey, Rick Rule, Bob Bishop in those days. And then, of course, we had reactors and stuff happen, and everything fell apart. Then we got back again. Then in 2007, we gave birth to Fission Energy, and in 2013, we sold it, kept the PLS project, developed it, bought the other half from Alpha. We will do the right moves, but at the same time, we will set parameters to make sure our shareholders get to vote. We've been around for a long time, and that's why this is a very special time for our technical people. We worked very hard on Waterbury, but the most we could squeeze out of that thing was about 13 million indicated. And here, our first run was 80 million indicated. So, you can work very hard sometimes, you got to have some luck as well. And we're fortunate. Our technical team is on the edge, learning new ways to do things. We had a board call today, and Ross says there's a new geophysics system he wants to try, which can, instead of doing ground geophysics, we may be able to do this and probably get better information. He thinks of new relativity surveys out there we can do. So we're always, in fact, this deposit, unlike some people out there think, it wasn't found by a man. It was actually found by an airplane. We flew an airplane with high resolution, like a flying Geiger-counter, and it just like a scintillometer flying over the surface. And what we were looking for through the basin was we're looking for high-grade boulders or outcrops of uranium, and we did find them. So that's kind of our. We try to be on top of the ball technically, and we're today we talked about another idea. Another example we're going to do is, using core drilling is quite expensive, right? But RC drilling is very cheap, and that's how they often explore actually in the United States, because it's very cheap. But you can put down a downhole, and you still measure radiation down in the hole, right? Downhole gamma. So we're going to be doing that. That's another example, a way to save a lot of money and still get some drilling done. So, there's a reason why we found it and nobody else did, because remember, everybody was so focused on the East, no one really talked about the West, right? Everything's got to be deep, and it's got to be at the unconformity, and it's got to be, like Cigar Lake. It became the model, right? Just like, how it is, hockey, baseball or football team wins, and they have a model of how they did it, and everybody tries to copy that model. The same thing in the basin. They've got there was a model out there that Cigar Lake was, and so everybody looks at our team and says, well, what about looking for basement? And what about the West? Because the West will have that. So we flew this airplane around the basin, found these boulders, and then we went up ice with geologists, and we made the drill hole. So, it's very important, even at our stage, that we're always on top of trying to think of new ways, because technology is changing, and you got to take advantage of that.
Yeah, well, you've been starting to segue into my next question, which is next steps, and I want you to explain why a speculator who's not invested in any uranium at this point would look at fission uranium as the way to go. Sure, optionality exists. You guys have a extremely economic project, as the PEA displayed, and as the uranium price appreciates, your share price is certainly going to appreciate. But what about exploration upside, or the next steps towards production?
We're look at the project first. A step back. People sometimes see a PEA and think, oh, they're done. They're going to go into mining now. That's not true. We did it because we wanted to know how this would look. But, for example, the PEA we did doesn't include our 600 West zone. And the 600 West zone is very important. It's on land, and what it does is it means you don't have to move the dirt twice. What we'll do is we're going to start mining on 600 West first, take that dirt, build a burn. When that's done, we fill the hole back. Now, that's a very cool economic way of mining. So that's one thing we're doing right now, is exploring 600 West to show, that this thing is going to grow. Every conductor can have high-grade uranium, but all uranium has to come from a conductor. So this is a situation where we want to certainly test and check other conductors. So there's 105 conductors on our property. We've only done 3. We've only looked at 3 conductors. There's a lot of conductors left on these things, and they're all EM conductors that we think that can host uranium. And Forest Lake, for example, actually has better signatures than the 780 zone. So we're going to be testing those areas as well. So there's lots of opportunity left on this property. We just, unfortunately, people sometimes think, the exploration upside is gone. It's just silly. There's lots of upside left, and that's one of the reasons, by the way, the Chinese have gotten involved. The SOE, CGM, has said, for them, they want to grow this 300 million pounds. They need to grow this because they have got a thirst for uranium. And one of the reasons that people should be buying uranium stocks is, I think it was a quote by Ed Sturrock from BMO. He's based out of London, and he said the only commodity that went up last year in price, believe it or not, was uranium. And the last 3 weeks, every commodity got crushed, right? Except one, uranium. So what's holding up the best in this downward market? Uranium. So if you're going to pick one commodity, this is it, because there's no love about uranium. There's nothing like it. There's no gold bugs and a bunch of them out there that believe that, like gas, that it's all manipulated by governments and things like that, right? Nobody has those things about uranium. Isn't a function of the economy. It's a function of the growth of reactors, and that is going through the roof. China alone, they've got 30 reactors. They're building 24, and are you ready? 14 more are starting this year. They're going to have 38 going by the end of this year. And every one of those guys needs a lot of uranium. And in fact, now they're building for other people. So we've got lots of growth on this project, lots of blue sky, and uranium is the one commodity you can hide in.
Well, sure. Our focus so far has been on the merits of the project and of your leadership team and what you've built over the last couple of years. But as you just pointed to, you combine that with the state of the market. And we've been doing a lot of interviews on Palisade Radio the last few weeks. One just out with Rick Rule. I know he's talking at your event.
Right.
And uranium has better prospects than almost any other commodity. And that's a great place to be.
Oh, absolutely. There's no comparison to it. Like Ed Sturrock, a lot of smart guys, the facts speak for themselves. You want to be, it's like, for example, when you have a crash, you want to be in the stock that's going to get hurt down the least, right? Same thing with a commodity. This is the commodity which has not been crushed. With oil coming down, oil's coming from 100 down to 20, let's say 30, right? And we went up. We went up from 28 to 35, right? We went up 25% when the rest of the world got crushed. So, there's it's a very good commodity to be in.
Well, I want to ask you a question that you probably don't want to answer because there's no good answer to it. You've built a company that doesn't rely on the price of uranium. You're economic where it is, but what's your prediction for the next 12 months? Do you think the move is going to happen quick?
When it does, it always happens quick. That's the problem. It's not like you get this, jump in $1 or $2 in oil or this stuff. When uranium went, you remember the last time it went from $7 up to 140, right? Everybody thought the previous high before was 37. Okay, yep. 37, and it went past that. So for me, the key will be continue to be belief that two things could do it. Japan continues to grow. That'll be a gradual, or a problem at a mine. Usually what causes jumps in commodities in uranium has been mines. For example, when we jumped from 13 to 20, it was because Cigar Lake got flooded and it wasn't coming online, and there's such a tight supply. And then you had, then you've also had the fire down the Ranger in Australia. So usually it's an event. I personally think that as the Chinese start to buy uranium in the open market, it'll cause some tension. One of the problems we've got is that the utilities have only bought about a quarter of the usual amount. So instead of what they've been buying over each year, they buy it spread over 4 years. So they've got a lot of their coverage time is definitely, they don't have any uranium come 2020, but they don't wait till then. They usually, a couple of years before, if not before that, they like to know they've got uranium. Uranium is a very small part of running a reactor. So it's not like if uranium goes to 100, they go, oh, we can't afford it. No. We figured out once that I think Sprott Asset Management did a quick number that unless uranium at 200, you wouldn't be touching the interest payments on borrowing the money, normal standards. So it's a very small part of running a reactor. So that's why you can have these huge moves. It's insensitive, right? To me, I thought it'd be, last year. So I've always been wrong because I'm biased. But, for us, it matters a lot to us, the price of uranium. It affects our stock price. If, suddenly uranium prices shot up to 50, our stock will go through the roof to $1 plus. There's only a handful of names that, you should really own. Denison, us, I like the Mears Company, Uranium Energy, and Cameco. And if people don't want risk, they can buy the ETFs. But, for us, I think we offer stability with this financing. We are able to be solid now for the next 3 to 5 years. Don't need any money, no more of that. Up in Canada, we have these flow-through funds. It's like a bad treadmill because you keep going to them. They dump them on because there's only a small pool of people, right, who buy these things. We're off that treadmill. I like that. I like the fact that we've got the best developed uranium asset in the world. And Chinese already own 20%. You got a built-in buyer there. And, I'm going to be going to India this spring. I've been invited to come out and talk to utilities there. They're just in some offtakes. And so, we've got, we've been, there's other players we're talking to. When you've got one, it's like when you've got a job, it's easier to find a job, right? Same thing here. You've already got 70, 80 million bucks. Well, it's easier to get more money when you've got money, right? Because when you don't have money, the bankers will squeeze you, and you and I know that, right? Right now in this market, he who has the gold wins. In a bull market, it's the companies because money's chasing it. Right now, companies are chasing money.
Yeah, well, adding to your point, Dev, and this will be my last point, I bring this up on the show all the time, but uranium is a very unique sector as a way for people to invest in a public company. You look at something like gold, and there's several hundred different companies for investors to go into, but in the uranium space, and especially today, if you're looking for a quality uranium company, you listed a few of them. There's just not that many, and like you said, the move is over before you even realize it. I just remember looking at stock screens years ago when the uranium prices started to move, and you're talking 20-30% moves day after day for a couple weeks, and just like that, the investment you've made or speculation is appreciated hundreds of %, and I guess it's only a matter of time before that happens again.
Well, yeah, I agree. I mean, it's different altogether, and when it comes to we don't. As someone said, the entire uranium market's only like $6 billion. I think it's even less. I think it's $4 billion. That's smaller than Lululemon, one clothing company, right? At the same time, it does make it easier, absolutely, to do those things.
Yeah,
easier to pick stocks.
Well, Dev, I want to thank you so much for taking 30 minutes out of your busy schedule today, and I hope that yourself and Fission Uranium has a very successful show this year up in Vancouver. For any of our listeners that want more information, I'd direct them to fissionuranium.com. Dev, if you have anything else to add, go ahead now.
No, that's great. Thank you for your time. I think these are tough times, and investors need to be very wise where they put their money. And you want to be in companies that are financially strong, well managed, and I think in the right commodity. And I think that's where we tick 3 boxes. I think we're financially strong. Our management's been through tough times, and I think we're in the right commodity, which hasn't gone down like the others have this year.
Absolutely. Dev, thank you so much for coming on the show.
Thank you.
think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen? Or are you too stupid?